Happy Halloween, everybody. Welcome to Student Education for the 31st of October 2012 and an update on the four majors this morning. Hope you have a fantastic Halloween, guys. Okay, let's get back to the business. Let's have a look and see what's been happening on the charts. First up, we can look at Euro against US dollar. Got the 6-screen strategy template up, the CTC, or count the cash, we like to call it. Let's have a look at the daily. Interesting day yesterday with the Spanish quarter GDP figures coming out very pleasant. Up. Took a lot of people by surprise, and in doing so, yesterday we had a nice little rally to the upside. Fantastic to see. And what it's done now is it engulfed the prior candle, the prior two candles, in fact. Still having problems, however, with the 20-period moving average above us. But most importantly, we are seeing price now forming higher swings. You can see the lows are getting higher, which indicates that we are seeing a bit of momentum, and all that's occurring above the 1285, which is above the institution moving average. So things are looking good, and as long as it maintains above these levels, then obviously we're going to see price heading up higher towards those prior highs that we had recently here at the 13,1500. That'll be our long-term target. So going into the first Friday of a new month, we expect non-farm payroll. As we head into it, we expect a lot more news announcements, especially from today. Going into Friday, there's a hell of a lot of news out. We have the gym retail figures that just come out positive, which is fantastic. We also had the Japanese market last night doing quite well on the average cash earnings year-on-year figures that have come out. But French consumer spending month-on-month figures coming out at 7:45 GMT this morning. We have the Eurogroup meetings all day, so that's going to be interesting. We have the CPI flash estimate year-on-year figures later this morning at 10 a.m. GMT. Then we have unemployment rates at 10 a.m. at the same time for Europe. So there's a hell of a lot of news, guys. I mean, that's just for the European session this morning. Then we have the US unemployment cost index, Chicago PMI, crude oil inventories, which is quite an important one for the US. We're going to see how much companies are actually holding storage of crude, because it'll tell you if they are indeed seeing a bit of contraction, expansion. The more crude you tend to see companies holding, which means that there is production. Apologies, I had to spit that one out. And all that all leads into positive expansion. And then tomorrow we have French and Italian bank holiday to start with. So the French and the Italians taking tomorrow off, the day before the Friday. But we have a lot of news tomorrow in shape of, we have the manufacturing PMI results for sterling. Then we go into the big one during the afternoon. We have the unemployment claims for the US market, 12:30 GMT, which is an important one. The ADP non-farm employment change. So that's a figure that comes up before the non-farm employment change figure. So all this leads up. And then on Friday we have the big stuff. So just be aware of that, guys. Okay, so back to Euro. Near term, yesterday's bullish engulfing candle. Happy days, taking away the past 2 days of negative sentiment or indecisive sentiment away, consolidative sentiment away. If this is to be a genuine bullish engulfing candle now, we need to see price acting on that. We need to see price moving higher. Will this morning's gym retail sales figures month on month actually do any good at actually doing that? I think the unemployment rates later this morning, 10 a.m. GMT, we're potentially going towards that. Expecting no change on that. If it comes up lower, then we could see something, see some negative outcome for the euro. But as it stands now, bullish engulfing states that we should be seeing positive upside. Okay, let's see it do it that. So what we want to see is intraday, we want to see price moving higher, but you can see quite clearly near term on our 4-hour chart, for example, we had a lot of resistance near term. Institution moving average over the past, what we're looking at here, 16 hours or so, has been very, very strong. The upside, we have both the institution plus the 50-period moving average above price. And notice we have two indicators going blue. However, the most important one being sentiment on either side is still negative. So it's telling us we should still be looking for bearish sentiment. So as long as there's resistance above price near term here on our 4-hour, you can quite clearly see, then ultimately we should be looking for that negativity to hold strong. So only if we see a nice bullish engulfing candle above this resistance level, this 16-hour resistance here, that would indicate that we should be seeing price moving higher. And if so, then we target prior highs. And the one noticeable one is the 1300, that psychological round number that a lot of traders are aware of. And on the euro against US dollar, 1300 is that major support and resistance, that psychological resistance level or support, depending which price it's trading on. is above us. So where we're trading now at 1297, there's 30 pips to the upside. However, you can be trading to a major resistance level. Be aware, if you do see a break to the upside and if you want to capitalize on that, you're going to have to be quite aggressive. So make sure everything's in favor, because you are going to be seeing price potentially taking a bit of a, it'll consolidate as we head into 1300 at least. So if this is to be positive long term, we need to see 1300 being broken and closed above. Otherwise, look for continuation to the downside. A nice bearish engulfing candle here. If there's any relatively bad news out this morning for Europe, and then we should be looking to target the near-term support and resistance levels to the downside. And noticeably, we had a consolidation level here just recently at 1290, but ultimately way back down here towards these areas here at 1280 would be a nice one, or 1284. We'll go for 1285 because that's the institution moving average on our dailies. So clearly, bearish engulfing here would look for the downside towards the 1285 to be back on, and look for that all important red arrow, red candle, etc. to show you that confirmation. Onto sterling, let's look over here. What happened yesterday? Little bull marker, bull move to the upside, almost like a bullish harami. What it's done now is it's clearly shown us that we are seeing near-term price moving higher. So that indicates, if I can get my trend line to work properly, that would be great. There we go, extended, so you can see higher swings would depict upside movement. Noticeably, all this is happening at a major support and resistance level, psychological support and resistance level in the shape of the 1600. 1300 for the euro, 1600 for sterling. You can see prices now playing, it's just moving backwards and forwards. More consolidation above 1600, which is more of a positive stance. Yes, the candles have gone red, and but we still haven't got the histograms on either side, which are also showing the same effect. So at the moment now we have an indecisive setup, because we have red, however the histograms on either side are red. Blue, apologies. So that's important. The longer it spends above 1600, the longer we're likely to see price moving higher. If it's capped by this intermediate trend to the downside, then we should be looking for resistance near term, and we shouldn't see price really moving that much because of the resistance level being so close to where price is trading now. So if anything, as we go into a week with potential, with a lot of potential news, then you tend to find this happens or occurs. So just look at it this way. We do need to see the prior swing over here. You can quite clearly see a nice evening star formation here. We do need this area over here to be breached for price to still look positive long term. The histograms are telling us we should be looking for price to potentially find further upside favoritism. So we do need the price to confirm that. We don't want to be speculative. We don't want to be trading any speculative moves. So we want the big boys out there to actually show us, or to confirm that they're interested in still moving higher. The fact that it's still trading above 1600 goes a little way into confirming that they're still wanting to go higher. We had a false breakout just recently. However, to get that confirmation, we do need this downside trend to be broken. Lower swings depicts downside and a negative trend. So a break above this area here, this consolidation area here that we've had just recently, above the 1200 mark in particular, or 1500, would indicate that we should be looking for further upside moving for the remainder of the foreseeable future. For our chart is showing exactly how these lower swings are forming. You can quite clearly see we've just moved back, pulled back from that all important high point that we had recently over the past couple of months at 16300. Trading below the institution moving average, which is not good, but still trading above the 1600. Okay, so we've had, you can see quite clearly near term the institution moving average acting as a resistance level, and price each time she's moved into that area has looked to target back towards 1600 as its ultimate target to the downside. Now we've had a move to the upside just recently after almost 12 hours of indecision. We've had a bullish engulfing candle as of yesterday at 9 a.m. and since then prices moving tentatively to the upside for sterling. Still below the institution though, guys, and as I mentioned, rather get above all this noise here at 1500 to confirm this is genuinely moving higher. By doing so, closing up here around about 1500 would confirm that price is now happy above the institution moving average, happy above this consolidation area here to the downside. Notice histogram on either side on our 4 hour, very indecisive. Okay, not one blue, one red. There seems to be a bit of both. Red more in favor, but we're still above 1600. Okay, but as long as it maintains above 1600, we should be looking for upside. Failure here at the institution, or this trend line around here at 1611-ish would constitute, we would need to see a bearish engulfing candle, and that would constitute that we should be looking for downside and back towards the 1600 is our first target. On to US dollar Swiss franc. Yesterday's bearish engulfing candle confirming or potentially confirming that 940 is still very much a major support and resistance level high, and you can see quite clearly how price over the past couple of months has found exactly that resistance at this institution moving average, which concurs with the 940 that we have on the chart. So bearish engulfing over the past 2 days of consolidation, it would dictate or indicate that we should be looking for downside favoritism for this particular pair. I'd go for roughly the 920 primarily because we've had more touches as it stands. So look at your 4-hour chart to give you an entry level to the downside. As long as everything is in your favor, you can see quite clearly now on my hourly, for example, we're seeing price now playing tic-tac-toe with the institution moving average. The last hour, you can see a lot of candle wick to the upside. Price, trying to entice people to the upside trading session. You can see quite clearly that over the Asian session, the high that we had yesterday at 2100 GMT at 930.25 is still in place. So a lot of indecision candles prior to us trading this morning. If this is exactly the case, we want to see this bearish engulfing candle with a shooting star, a lot of wick to the upside with a massive negative trading session at the bottom end of it. We'll say it's bottom heavy, and if it's bottom heavy and it's trading below the institution and the histograms and all the moving averages are above price, and ultimately what it's trying to tell us is that we should be looking for the downside to prevail. Okay, so look for an entry and look for a potential target. I did say 920, 925 would be a good opportunity to see a great return, and then you'll probably find as we head into 925, people will start taking a bit of profit off the table and we'll start to see price starting to slow down. But near term, we have a consolidation area here, if you want to, on an hourly chart, roughly between the 9289 and 9285 mark. So not a hell of a lot in terms of intraday movement to the first part, but by doing so, she'll be trading below the institution, which constitutes that we should see further selling contracts being bought up, and that might very well just keep her moving to the downside quite nicely throughout the day. Intraday, you can see quite clearly we had higher swings just recently, and we've had a break of that trend line, so now we should be looking for price to pull back, consolidate, and start potentially a new trend. On to the last pair of the day, the US dollar Japanese yen here on the daily. Yesterday's candle, very, very interesting. Indecisive candle on on an institution moving average, guys. You'll notice that recently we've had a lot of attempts to try and break 80. This is the psychological, or it is a major support and resistance level long term. And you can quite clearly see that price actually traded above it through Thursday of last week, if I'm not mistaken. However, Friday taking it all back, and we're now trading below it. Yesterday, the Bank of Japan doing its best to promote easing on there. They tried to come up with a plan to help alleviate the negativity that's being seen on their markets, and it worked a bit. We saw price yesterday ranging a hell of a lot because of that. However, still not managing to close above the 80 though. Okay, if this is to remain positive, I did mention yesterday we do need to see price trading above 80. The longer it spends below 80, the more likely resistance is going to be formed and the outcome is going to be negative. Each time we can see, we're going back to June, July, or even May of this year, we've seen price actually battling to find any momentum once it's traded above that all-important 80 mark. And in doing so, falling back below and retargeting 78, another major support and resistance level on this time frame. Quite clearly see that we've been consolidating between these 2 points. One or two areas where we've seen clearly a breakout. However, these candles that have shown us the breakout haven't really moved on with a lot of guts. So as the Fed started to print quantitative easing 3, and we saw price moving higher. However, that didn't really stack up. Back below again, and then we had some favorable figures for the US market, which saw price moving to the upside recently. However, to be positive long term, we do need to see 80 being broken. The longer she finds resistance here near term, the more likely is we're going to see price reverting to the downside, and we should be looking at this 78 yet again as our target because we've been here so many times in the past. So look, we could potentially see this week's non-farm payroll figures really helping price action or direction for us. So if you can be patient, rather bide your time and see exactly where the US dollar Japanese yen finishes by the end of play this week. Because if non-farm takes price above the 80, then we should be looking for more kick to the upside for the new week ahead, and then we can start looking at topside Price support and resistance levels here, roughly around the 8150 going into 8200 would be our first target. But ultimately, our long-term goal, if we do get a close above 80, would be the 8400, guys. You can see the histogram on our daily very much negative as we've gone into this consolidative range. Has been blue primarily through the most of October. However, that's come as we've traded to the upside within this consolidative range. We do need to see price now breaking, closing higher than 80 to confirm that the sentiment on the other side remains positive for the foreseeable future. Okay, so what we could do and what we should be looking for is either a bullish engulfing candle this morning, taking us above the 79.80 going into the US session open, and then we should be targeting the upside. Other scenario would be, you can quite clearly see the past 3 days, a lot of body support here, roughly around the, what's that, 79.60-ish, we'll go for that, but that also shows the wicks especially this morning, also coming into contact with the institution moving average. So what we want to see is a clear close below the institution moving average. So anything closing below 79.50, going into the US session, and the US session taking that aboard and pushing it lower would constitute that we should be looking downside, and we should be targeting any of those areas below. You can quite clearly see that the prior high, consider intraday, if I take that away, you can see quite clearly the prior higher intraday on mid-August is where price is trading right now at 79.50, as well as the institution. So we do need to see a break of prior resistance, because at the moment now, the past 3 days, we've seen support. And the longer it's been supported above the institution, also above a prior resistance, the more likely price is going to be reattempting 80 very, very shortly. So very, very important that this to be negative over here at a major resistance level, then price needs to show us that. Yesterday's candle, very indecisive. Did trade below here at one stage, however, moved higher. A lot of wicks intraday. And that's only confirmed on the 4 hour. You can quite clearly see here as price has been moving backwards and forwards. Okay, histogram on our intraday charts is very much positive. However, you can quite clearly see near term, we are seeing price actually testing it. I've taken this fake out here out of the picture, as you can see more touches has constituted to a stronger uptrend, and that's exactly the case. Price is trading now into that just recently and moving higher. The longer she stays above this area, then the more likely is she's going to attempt the 80 quite soon. So you can quite clearly see near term here at 79.40, a lot of resistance previously, broken, trade higher, selling into it, and we had a morning star formation here, and price has been tentatively moving to the upside near term. So trading between these 2 points now, major support and resistance level above us here in the shape of the 80. Must see price trading above that by the close of this week. If not, we could see resistance now, because this move lower yesterday is constituted to a swing low, and you can quite clearly see what's happening now from a high point, swing low, and price is now going to come into this area quite soon. So a lot of indecision as we head into this intermediate trend, or intraday intermediate trend line. We could see something happening. So be patient, wait for that move either end of here, either below 79.40 or above 80. Otherwise, don't trade this consolidative range. You tend to find these as we head into a major resistance level, that being the 80 near term. So got to see a break below 79.40 at least, or which will constitute a break of the trend that we've seen since the start of October. That would be quite a negative call, or show a lot of negative sentiment, and because of that, then we should be targeting the near side downside areas here. So one at 7800 for argument's sake, which will be back towards the institution. So it'll give us a nice target. It'll give us a nice indication where targets are likely to be to the downside. Okay, that's it for today. Go away. Have a fantastic trading day. Just remember, the longer that we're getting quite close now to non-farm payroll, Wednesday, Thursday, and Friday, hell of a lot of news out, guys. So be aware of the news announcements. See where price is trading for that particular pair you're looking at, in relative to what the news announcements are likely to come out at. Okay, if they are really, they're showing a lot of red, and they are important, then rather just stand aside and let's see what the market spits out before we make any decisions. We don't want to be part of the speculative group. We want to be trading positive or negative sentiment, and that's going to be dictated by the big guys out there that are moving the market. Okay, we want to sort of piggyback on that and get to our, with it, whatever way it goes, we just want a clear decision on that. Okay, and otherwise, have a fantastic Halloween. I know we're going to have a nice party tonight with family and friends, so enjoy it, and I'll see you first thing tomorrow morning. Until then, trade serenely.